Hey, welcome back everybody. This is Dave here, and this is the 5th video on M1 Finance. This is a kind of like a beginner tutorial slash almost advanced tutorial on how I use the awesome platform M1 Finance for investing in the stock market. So in this video, the main topic is going to be how to manage and how to invest in the stock market with M1 Finance. Now, in the previous video, I did go over automation. And automation is great when you're thinking about investing over the long term and kind of just setting it up and forgetting about it. But with me and my particular strategy with my investing is with the way I have my holdings and all of the companies that I have invested in, I get paid dividends every week. That is money that is being paid to me by companies that I've invested in, that I bought their stock. So with that said, as you can see here, my portfolio, I'm not a millionaire. I'm not even a 10,000-aire. My savings as of date is less than $10,000. $6,393.31 as of 12/35 on July 21st is $6,300. But anyways, every week, like I mentioned, every week I get paid dividends. And you can see that if we look into activity and we show only dividends, you can see, I wouldn't say every day, but it is every week I get paid dividends from one of these companies. So for now, because I don't have that much into each company that are in my portfolio, these are cents, right? But then, we get into dollars. And then soon it'll be doubles of dollars. And then fives of dollars, tens, hundreds, millions. Oh man, if I got paid $1 million in a dividend from a company, yeah. Anyways, so let's go ahead and take a look here. This is kind of my deep dive into how I use M1 Finance. So, let's say yesterday, or not yesterday, this was on the 16th. I got paid roughly, that is 98 cents, 14, so that was $1.03 in dividends from Total Energies as well as Medtronic. So the day after, or on midnight, if I looked into my account, I would see $1.03 as far as my cash balance goes. To manually invest, or for M1 Finance, let me state this up front. When you have a cash balance of $25 or more, it'll automatically invest that $25 into your allocations here in the market or in your portfolio. So 15%, 10%, 7, 5, 4. That's the percentages on $25 or higher. But if I have $1 and we'll just say $1. If I have $1 or $10 or anything under $25 here in my cash balance, I can choose to manually invest that money into a particular pie, or into a particular company. So if I want to invest it into a specific pie, I can just click on the pie, and then you see the buy sell. I can set up that order, $25 or $2, $5. Obviously, I don't have the cash on hand, but you can choose to buy, or you could choose to sell, but buying is always better. Likewise, you can do a specific stock or a specific company that you want to buy into. And it's all just drilling down. So, you can see here, let's say I want to buy for $1. I can buy $1 worth of stock, fractional sharing of USDP partners. And that's a transportation conglomerate, I guess you could say. But yeah, so you can set it up like that, manually purchasing pies or stocks. But here's the thing, and this is kind of why this particular video exists, and the reason why I wanted to do an entire series, even though there are many more out there that do handle M1 Finance, and that is holdings. One of your tabs, or I guess this would be a sub-tab, is holdings. This shows you, what shares, or how many shares of what company you have, the average price of each share, the total cost basis. Your cost basis is your average price. The average, I believe it's the average price times however many shares. If I'm not mistaken, let's double check that. Let's bring up my trusty calculator here. And that is $6.02 times 107.98439. Yep. Cost basis is $650 and... Okay. Whatever. Now, another thing to look at is this maintenance requirement. This deals with borrowing on margin and margin lending. Almost in every video, I will tell you to not use margin unless you know what you're doing and you are financially knowledgeable enough to be able to use that type of lending. Because using margin can go bad very quickly, especially in an environment like the stock market. This is not a money lending to where it's not like a car loan or a house loan. Well, actually, it is kind of like a house loan. Not really, no. Because with margin, you have to have a certain amount of money in your portfolio in order to maintain that loan. If it goes below a certain amount, then the brokerage, and this goes for every brokerage, not just M1 Finance, but if you have a margin loan out, then the brokerage, if it goes below the maintenance requirement, they can start selling off your shares, charging you higher interest rates. That's using margin is how a lot of brokerages, especially the ones that you can find online for free, that is how they make their money. If you look at the Robinhood IPO, you can see a lot of a lot of money, it's not their main source of revenue, but a lot of money is coming from that margin lending that they do. So what does this mean, and what does this have to do with maintenance requirements? Well, let's look. According to the definition from M1 Finance, the maintenance requirement is the minimum amount of equity that must be maintained when leveraged with M1 Borrow. So with M1 Borrow, you can see here that you're eligible to borrow up to $2,200 at 2% interest right now. And how that's calculated is through these holdings. It takes the current value of your portfolio, and it takes your allocations and the maintenance requirements to tell you how much you're eligible to borrow for. It's an automated way of doing it. So USDP, this is actually, if I'm not mistaken, the largest maintenance requirement that I have, because it's a small cap stock that pays a really good dividend, because it's a partnership between various companies. You could say it's a conglomerate without the big money. So with a lot of bigger cap stocks, those stocks will only have a 25% maintenance requirement. And that is the brokerage saying how risky that investment is. Because if you miss a payment, or if you don't pay back the borrowed amount, they'll start selling off your positions until you get that payment. And yeah, so for me personally, this is just an added column that I probably will never use, but it's there, and I wanted to go ahead and try to explain it. Hopefully I did a good job. Now, the column that we, or myself, are more interested in is this unrealized gain. And through all of these, you can click on the column title and you can sort. So if we sort highest to lowest, you can see that this is actually false because this company just changed their ticker symbol, so it's showing a false statement here. But let's look at Navient. When my cost basis for Navient versus what it's worth now, you can see that that's an 85.53% gain on Navient. My day before yesterday, my highest one was actually USDP. I believe it was USDP, that transportation company. It was sitting at like 102%. The reason being is a lot of these are still, the market is still correcting from the pandemic in 2020. So we had a lot of stimulus, we had a lot of fear in the market, which caused the stocks to go way down. And I started investing with the original stimulus check. So the market was still down. But once those checks started happening, more and more people got greedy. So the market started rising and rising and rising until, as you could probably have seen in the news, the market is at an all-time high. Yeah, that's just the market being the market. And that is the gain percentages that we're looking at here. Now, what does that have to do with getting dividends? And what does that have to do with our cash balance? Well, when I get a dividend throughout the week, unless it's on Friday, on the dividends that I get on Friday, I won't manually invest those. I'll just leave it in there for the Monday automated investment, because that's when my rules and everything are set up. But let's say it's Tuesday, or let's say I get the dividend Monday at midnight and it's Tuesday morning. I work nights, so I keep check on it. So what I do is I go into holdings and I sort by my lowest position. The reason why is so I can lower my cost basis. My average price right now, Consolidated Edison, there was like a huge market fear thing yesterday. So usually it's Verizon and QYLD for various reasons. I got in at Verizon at a very high price, but this is your dollar cost averaging. So right now, you see my cost basis is $111.37. Well, the value is $109.10, which means that I've actually, as of today, I've lost money. If I sold all of my shares, all 1.49943 of my ED shares, I would have actually lost, $2 and some cents. But I'm not going to sell. I'm going to buy. So I want to lower my cost basis so I can start, lower and lower and lower it until it starts looking like this, where I'm up and I'm not investing. I don't want a dollar cost average higher. I want to lower my cost average. So, I organize this. So, what is my biggest loser? Right now, it's Consolidated Edison. So, if I had, $1 or more in my cash balance, and let's say it's Tuesday, Monday night, when I'm working, I work until 3:30 a.m. So I'll say, okay, ED, that is no, that's not an energy. It's a utility. So I'll go into utilities and I'll find Consolidated Edison and I'll select it. And you can see here, my average share price is $74.27, but as of right now, it's trading at $72.73. So I'm lowering my cost basis. I click the buy and sell button. I put in the $1 that I don't have, and then I'll hit continue. And when that happens, if we go back into the main portfolio, you'll see an upcoming trade. As you'll see, there's one trade morning 6:30 a.m. tomorrow morning. And that'll be 9:30 Eastern Standard Time. Likewise, let's say it's Tuesday or Wednesday. My automated transfers are on Monday, but let's say the stock market is down really bad. I can say, okay, I want to make a deposit of $100 or $200. I think yesterday I did $250 or $200, something like that. But yeah, I did $200 at the market open because yesterday was Tuesday. Monday the market was down between 2 to 4%, so everything was red. So Tuesday morning when the market opened, I actually put $200. Anyways, so yeah, the market is red. You want to, or the market closed super badly and you want to take advantage of that, or if you're an M1 Plus member, the market opened, it's really bad, you're still in time for that next trade window, you can choose to set a one-time transfer, and you can transfer that way. But if you want to invest in a single company and you do anything over $25, you do have to turn the auto invest off, or else by nature it's an automated platform, so it'll invest automatically. Anyways, let's say you want to put $20 into a stock. That's fine. You deposit $20, you go into your holdings, you organize the unrealized gain by the lowest or the biggest loser first, and you buy the biggest loser. That way, in the future, we're going back to the future. Whatever. I'm pretty sure that's not how the song goes as far as tone. But Back to the Future, we look to the future, and now we've lowered our cost basis, so now we're gaining, additional revenue. Anyways, but yeah, that's pretty much it. I wanted to go ahead and go over the holdings, and this is probably the most untalked about feature of M1 Finance, and I wanted to go ahead and cover this particular feature. So let's go ahead and stop the video here. In the next video, we'll go ahead and look at the activity and how that operates as far as M1 Finance. Thanks for watching. Bye-bye.